Hello everyone, it's great to have your company here on 𝐾𝐤𝐴 TV. I'm Rachel and you're watching The Buzzing Trends. In the first segment today we'll be looking at those ASX listed stocks which are planning to cut their carbon emissions. In the first segment we'll look at BHP's plans to sell its petroleum businesses to Woodside Petroleum. And in the last segment we'll look at some ASX listed stocks that have created specific strategies to cut down greenhouse gas emissions. Mining giant, the BHP Group, has confirmed it's reassessing the future of its petroleum business and is in talks with energy giant Woodside Petroleum. Speculations have been rife for the last few weeks that the BHP Group is weighing a move to retreat from the emission-related fossil fuel business by selling its global oil and gas business. Reacting to the rumours, BHP has made an announcement stating that it's initiated the strategic review of the company's petroleum business, re-evaluating its long-term strategic fit into the company's portfolio. And as confirmed by BHP, one of the options on the table was to combine BHP's petroleum business with Australia's leading independent gas producer, Woodside Petroleum, in exchange for shares. And talks for a potential deal are underway. Oil and gas companies have been constantly facing investor pressure for quite some time now regarding the production and contribution of fossil fuels to global warming. The demand for high emissive fuels has fallen in the last few years due to higher emphasis on green fuels, a move which aims to curb climate change. Additionally, the introduction of the environmental, social and governance metrics into the industry has exerted additional pressure on fossil fuel producers, as the metrics have been a popular way for investors to evaluate companies they're willing to invest in. Now, as a result, big resource companies across the globe have come under increased pressure to realign their business portfolio to limit greenhouse gas emissions. And recently, BHP sold its interests in the Colombia-based Cerrejón mine to Swiss miner Glencore, and is in talks to sell the remaining coal assets in New South Wales' Mount Arthur asset. Meanwhile, in May this year, the International Energy Agency also warned investors to dodge funding on new oil and gas projects to achieve the goal of the International Paris Agreement. This would be to limit the increase of the global temperature to 1.5 degrees Celsius. In a recent survey conducted by Invesco Global, around 1/3 of central banks and sovereign wealth funds have been known to gravitate towards reshaping their mandate on issues like carbon emissions and equality in the responses submitted by them. Now, around 63% of central banks that participated in the survey have said that dealing with the issue of climate change falls under their experience. Around half of the central banks that participated in the survey think climate change should be tackled by making it part of the objectives regulated through monetary policy. The European Central Bank, for one, has announced recently that it will assign higher weightage to climate change-related issues while making key policy decisions. Since the last Invesco survey back in 2019, the number of central banks which responded to the question about having specific environmental, social and governance policies have increased to more than 50% now in the current survey. That's compared to 44% in the survey conducted earlier. On that note, it's time for a very short break, but stay tuned. I'll be back to share some ASX listed stocks that have strategies to reduce carbon emissions.
Property by 𝐾𝐿𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐾𝐿𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾𝐿𝐴.
Welcome back. I'm Rachel and you're watching Buzzing Trends. Now let's take a look at some ASX listed stocks that have strategies to reduce their carbon emissions. The first company on our list is the Suncorp Group. Suncorp is an insurance company which deals in personal insurance, commercial insurance, general insurance and banking products. Suncorp is said to be serious about its sustainable development goals through tracking and reducing its greenhouse gas emissions by 51% till 2030. Moving on now, Origin Energy is an integrated energy company that's engaged in energy retailing, power generation and natural gas production in Australia, New Zealand and elsewhere internationally. Origin is the first energy company to have its emissions reduction targets approved by the Science Based Targets Initiative, which is known to drive ambitious climate action in the private sector by enabling companies to set science-based emissions reduction targets. Now, this is to reduce its direct greenhouse gas emissions by 50% and also emissions caused by its value chain by 25% by 2032 and be completely carbon neutral by 2050. Moving on to the next company now, SkyCity Entertainment states that it's committed to reducing its carbon emissions by 38% by 2030 and its greenhouse gas emissions by 73% by 2050. Another commitment is that by 2023, 67% of its total spending on food and beverages will come from companies that with science-based emission reduction targets. Next on the list is Dexus Property. Greenhouse gas emissions by the construction operation of buildings makes up to 25% of Australia's total carbon emissions. As a real estate company, Dexus plans to reduce its direct carbon emissions by 70% by 2030, whereas in case of value chains emissions, it has committed to reducing 25% of those by 2030. Around 25% of Australia's carbon and greenhouse gas emissions comes from construction, operation and maintenance of buildings. According to Dexus, it's now working on reducing those caused by its own buildings. The ASX 200 Real Estate Group has concrete plans to reduce its direct carbon and greenhouse gas emissions by 70% by 2030. It has also pledged to reduce its value chain's emissions by 25% by 2030. The bottom line is fossil fuel producers across the globe are in the hot seat as the world is racing towards a green future. To reduce global greenhouse emissions, fossil fuel firms are under mounting pressure to limit their production, thanks to the burgeoning pressure from investors and the introduction of environmental, social and governance metrics into the industry. So with that, it's time to wrap up today's show. I hope you found that informative. Stay tuned for more news and updates on Kalkine TV Live. This is Rachel signing off for now.